Thank you. Hello, everyone, and welcome back to the Peterson Institute for International Economics. We're live streaming to you from Washington, D.C. with the second event of our Macro Meet, a presentation and discussion with Masato Kanda, the Japanese Vice Minister of Finance for International Affairs. We're very proud to have Vice Minister Kanda with us. He, of course, comes in a long heritage of people in the Vice Minister for International Finance role at the Japanese Ministry of Finance, very distinguished friends of the Institute, friends of Japan, or representatives of Japan, and friends of the US and the world. But he comes at a particularly opportune moment, an important moment, where there is so much going on in the world, challenges facing us all, and Japan is increasingly, as it has in recent years, showing international leadership. Vice Minister Kanda is going to speak on the topic of international collective efforts against global challenges, which befits his role and Japan's role in the G7 and the G20 at this time, as well as the second largest shareholder in the IMF and the World Bank. His speech will clarify various challenges the world is facing and evaluate global collaborative responses to those issues, especially from the perspective of Japan's G7 presidency. His goal, which is one we share at the Peterson Institute, is to inspire the audience about the importance of international cooperation in a rapidly changing world. I could not have said it better myself. Masato Kanda is, as mentioned, officially the Vice Minister of Finance for International Affairs of the Japanese Ministry of Finance. He joined the ministry in 1987, so he and I think, are rough contemporaries. He has been very loyal to the ministry and has held many senior positions there, including as Deputy Director General of the Budget Bureau, Deputy Vice Minister for Policy Planning and Coordination, a key role, and Director General of the International Bureau. He previously held senior roles at the World Bank and the OECD, and he serves as chairman for the Corporate Governance Committee of the OECD since 2016. He actually has an MPhil in economics from Oxford after receiving his BA in law and politics from the University of Tokyo in 1987. I should mention that he is also an active member of the Bellagio group of international finance officials and academics, which is where I had known him, but I got to know him a bit better. And we're very grateful to Masato for accepting our invitation to join us today. Vice Minister Kanda, please.
Thank you very much for your very kind introduction, Adam. And it's a great honor and pleasure to make a speech to you, distinguished guests, at this very prestigious institute. So thank you again, Adam, for your invitation. We are standing at a critical juncture in human history. The world continues to face multiple shock waves, such as lingering effects of COVID-19 pandemic and Russia's war against Ukraine. Decades of high inflation brought an end to a decade-long low interest rate environment, which unveiled underlying risks and vulnerabilities associated with loose discipline in the financial market, as in the recent cases of the banking sector turmoil. At the same time, the human race finds themselves on tectonic instabilities driven by accelerated climate change, transformative digitalization, and intensified geopolitical tension. These multiple challenges are now altogether testing the existing international order that have built together since the end of the World War II. Against this backdrop, what kind of choice should we make to set the right course for the global economy and human society to be resilient and sustainable for the next decade and beyond? Slide 3, please. Today, I attempt to answer this question from two different points of view. The first is about the roles of the international fora, such as G7 and G20. I will elaborate this point by illustrating 5 key global challenges that these fora are tackling to address, namely, 1, the Russia's war against Ukraine, 2, debt issue in low and middle income countries, 3, global health, 4, climate change, and 5, digitalization. The second is about how we can set in motion transformative actions by business persons and policymakers, the experts in international organizations, together with the efforts in international fora in addressing the global challenges. Slide 4. Let me start with the roles of the G7 and G20 in addressing the first and foremost challenge, Russia's invasion against Ukraine. I admit that the existing multilateral system, such as the UN Security Council, has failed to provide effective solutions, where the very country leading the unjustified, unprovoked, and illegal war now for the Council presidency. Is that a joke? However, G20 leaders, led by the strong leadership of the Indonesian presidency, declared in November last year in its communique, today's era must not be of war. And most members strongly condemned the war in Ukraine as a cause of immense human suffering and many difficulties that the international community is facing. G7 has also been firmly united to continue its decisive actions against Russia and stand with Ukraine. In February this year, at the one-year mark of the war, G7 leaders, chaired by Prime Minister Kishida, agreed upon additional sanction measures in a variety of areas. On the day before the Leaders' Summit, G7 finance ministers strengthened their commitment to providing budget and economic support to Ukraine for this year, amounting to $39 billion. This includes Japan's new commitment of $5.5 billion. And we just obtained the approval from the Parliament last week to enable Japan's support. These continued efforts from the G7 and international partners led to the approval of the IMF-supported program of $15.6 billion. We needed to continue such collective efforts to further increase Russia's cost of its war and stay united with Ukraine to counter the attack on our fundamental values. At the same time, we recognize that vulnerable countries have been disproportionately affected by Russia's war of aggression and associated global challenges, together with tighter financial conditions, unstable commodity price, and fragile market sentiments. Against this backdrop, supporting vulnerable low and middle-income countries to deal with debt issue is an imminent task we need to tackle through multilateral approach. The G20 has been playing and can play significant roles in this area as it includes emerging non-Paris Club creditors. The G20 implemented the debt service suspension initiative, DSSI, to alleviate liquidity pressure of low-income countries' risks when COVID-19 hit their economy. The G20 also established the common framework to address debt issues of risks. We need to swiftly implement it. The key issue is how to elicit constructive and responsible behavior from non-Paris Club creditors. In this regard, it is noteworthy that the G20 unanimously agreed at its February meeting this year to step up the implementation of the common framework in a predictable, timely, orderly, and coordinated manner. We can more effectively engage with non-Paris Club creditors by using this authorized common message as a leverage. Addressing debt vulnerabilities in middle-income countries, notably Sri Lanka, is also an imminent task. Our work on Sri Lanka has been making concrete progresses, including the recent approval of the IMF program. Now we are moving on to the phase of coordinated debt restructuring. Japan has been closely working with other creditors, including France, a Paris Club chair, and India, G20 chair, and we will have a historical event this Thursday on Sri Lanka, together with France and India and Sri Lanka. Japan is ready to lead the creditor committee with the two countries once it is formed to continue to help Sri Lanka. We will advance our efforts to ensure that all creditors will implement comparable debt restructurings. Enhancing debt transparency also matters a lot to prevent the debt crisis. Japan is leading the data sharing exercise together with like-minded countries to share our lending data with the World Bank to improve debt accuracy. All official bilateral creditors, including emerging and non-Paris Club creditors, should do the same. Slide 5. Let me now turn to the third challenge, strengthening global health. The COVID-19 pandemic starkly shows that enhancing global health is a global public good. Safeguarding our society against the next pandemic requires us to make continuous multilateral efforts towards better pandemic prevention, preparedness, and response, or PPR. The end of the COVID-19 pandemic shouldn't lead to the end of our collective actions. The G20 has made steady progress in this field. Indonesia held the G20 Joint Finance and Health Ministers meeting last year, as Japan did the first one in Osaka in 2019. On the margins of this joint meeting, the G20 officially launched a new financial intermediary fund for pandemic PPR, the Pandemic Fund, to address critical pandemic PPR gaps by catalyzing complementary investments. While the Pandemic Fund has successfully been launched, its main focus is on PP part, and the financing for pandemic R response remains unaddressed. We need to develop a new dedicated surge financing mechanism to deploy rapidly scalable financing for pandemic response once triggered. Also, strengthening and institutionalizing coordination between finance and health ministries is still on the way. Japan continues to work on these issues, including through G7 of Japanese presidency. The fourth challenge is climate change. We are in a severe race against the clock. As warned by the latest UN IPCC report, there must be a strengthened multilateral actions and drastic policy changes by each country. For instance, accelerating our clean energy transition is a matter of clear priority. To ensure smooth and stable transition, however, we need to address current vulnerability in the key phase of supply chains of clean energy products, that is, excessive concentration in a handful of countries and companies. For instance, over 90% of global production of silica-based solar PV is from just one country. Addressing such vulnerabilities will also create new source of value creation for developing countries toward sustainable development. In fact, not a few low and middle income countries show their willingness to play bigger roles in global supply chains of clean energy products. The G7 of Japanese presidency is now exploring a mutually beneficial partnership with the G7 and other interested countries in collaboration with MDBs for building resilient global supply chains and promoting local value addition by developing countries. Let me now discuss the fifth challenge, how to adapt our economy and society to rapid digitalization. Fast-moving digital technologies provide tremendous benefits in many areas, including cheaper and faster cross-border payments available to a larger public. But the new technologies have own set of challenges such as data privacy, cybersecurity, widening inequality caused by digital divide, spread of fake news, and social and political divide, and unstable and less transparent financial market, to name a few. In this regard, the issue is to maximize the potential of digital technologies while addressing such challenges through multilateral collaboration. For instance, the collapse of FTX was a serious wake-up call on the needs of proper, consistent regulation across borders. Finalizing FSB's work to develop high-level recommendations on crypto asset activities and markets and on global stablecoin arrangement is important. And the effective implementation of these recommendations will also be crucial. Also, we have to address risks from the development of central bank digital currencies, CBDCs, by ensuring factors such as appropriate transparency and sound governance. As a priority of this year, G7 considers how best we help the developing countries introduce their CBDCs consistent with appropriate standards, including the G7 public policy principles for retail CBDCs. Slide 6, please. Now, all of the challenges that I discussed so far press for drastic changes in thoughts and actions of business persons, policymakers, and experts in international organizations. The question is how we build proper incentive mechanism to facilitate such transformation. Let me start with the private sector. The private sector is clearly a strong driving force to address complex global challenges. However, if the prime motivation remains in short-term profit maximization only, they will go against the global endeavor to develop resilient and sustainable economy and end up failing their own business too. They need a guiding principle for enabling the business model to adapt to the complex and uncertain business environment and to contribute to solving global issues. In this regard, let me draw your attention to the ongoing review of the G20 OECD principles of corporate governance. The principles have been serving as a single global standard in the area of corporate governance, endorsed by G20 leaders and used by World Bank Group and the FSB also. Now, the principles are under review process. The most challenging and noteworthy proposal in the draft revisions is to include a new dedicated chapter of sustainability and resilience. The new chapter stresses that corporate governance framework should support sound management of sustainability risks in order to support investors' financial and investment decisions. In addition, the new chapter clarifies corporations' long-term sustainability is important to various stakeholders. Besides, amid the sustained growth of institutional investors' assets under management, the role of institutional investors as shareholders is particularly important in holding company boards and management accountable, including through their stewardship activities. Another important challenge is how we can address the increased complexity of company groups across different jurisdictions that can lead to opaque transactions amongst group members to the detriment of minority shareholders' interests. As the chair of the OECD Corporate Governance Committee, I am determined to move this initiative forward, seeking leaders' endorsement at the G20 Summit in New Delhi this September. Slide 7, please. The next focus is policymakers, including myself, who are struggling with the responsible for better policy design and implementation. The key question here is how we should measure economic well-being and practically use the measurements in our policy-making process. GDP has long been a core indicator of a country's economic performance, but its limitations have been well known since its creation. For instance, GDP doesn't capture all economic activities such as unpaid housework and misses important aspects of economies, including environmental sustainability, income and wealth distribution, and improved efficiency due to IT services that are often free of charge. These limitations recently have become more acute as our society and economy have undergone a dynamic transformation such as rapid digitalization, climate change, and rising inequality. Focusing narrowly on numerical growth without paying sufficient attention to these issues causes dissatisfaction and disillusion amongst the general public towards the value of a market-based economy in a democratic society. And now populism and authoritarianism prevail, unfortunately. Thus, it is high time for policymakers to start a serious discussion on what kind of measuring sticks we should have to improve the quality of our economic policy. That's why Japan, as a G7 presidency, takes up this issue as a priority and faces squarely with it throughout the G7 presidency and beyond. The last focus is about evolution of international organizations, specifically the MDBs. They have been playing core and significant roles in development finance to help developing countries reduce poverty and meet sustainable development goals. However, MDBs, especially the World Bank Group, also have to be evolved to play larger roles in addressing transboundary issues such as global health and climate change. The G20 and the World Bank management have been discussing in its mission, operational approach, and financial capacity. We continue to support this endeavor while stressing the need of safeguarding MDB's long-term financial sustainability, robust credit ratings, and preferred creditor status, as these are the indispensable foundation to continue to fulfill their roles with concessional lending. Slide 8, please. Let me conclude my remarks by revisiting the question I raised at the beginning. What kind of choices we should make to set the right course for the global economy and human society to be resilient and sustainable for the next decade and beyond. All the efforts that I described today highlight the importance of our joint actions underpinned by well-crafted and concrete mechanisms. However, what matters more to both our joint actions and such uncertain and rapidly changing world is our volition to preserve the fundamental values that human society has developed through centuries of painful history. With this in mind, Japan is determined to advance multilateral efforts through building coalition with as many countries as possible at all levels, individual, business, government, and beyond, and play the bridging role between G7 and G20 through collaboration with India as we hold the presidency of G7 and ASEAN Plus 3 this year. I'm very confident and looking forward to working with anyone here throughout the journey of building a resilient, sustainable global economy. Thank you very much indeed for your attention.
Thank you very much, Minister. If I could invite you. Thank you very much, Vice Minister Kanda. It is, as I think a Washington crowd knows, but I hope our video audience around the world appreciates, it is a refreshing change to have a G7 minister speak in such forthright and action-oriented terms rather than the language of communiques. And in that sense as well, that clearly you are having integrated thinking about finance and Japan's role in a very broad sense. So if I may, I'd like to commend you for that. You end with your call for Japan's role as a bridge between the G7 and G20. As you may be aware, we had the Indian finance minister speak here roughly 24 hours ago. Given the rise of the global south and the less than unified response of global society to Russia's war of aggression on Ukraine, and you've been very forthright, as has the Japanese government, that you view that as an act of aggression. How can the G7, how should the G7 and the G20 cooperate? And how does the G7 add value and get recognition rather than be seen as sort of the West plus Japan in a sense?
Thank you very much. This is really one of the most relevant questions, particularly this week of G7 and G20. So thank you for asking it. Obviously, Russia's prolonged war of aggression has exacerbated global economic challenges in every front. Support for Ukraine and exerting pressure on Russia is our immediate top priority. It is G7 that has led the international community in condemning Russia and providing unwavering support to Ukraine since the outbreak of the war. This illustrates G7's critical role at this juncture of heightened geopolitical and economic uncertainty. And G7 and other like-minded countries, such as Australia, are united on many of the G20 agenda, leading to many fruitful outcomes at recent G20 meetings. For instance, the chair's summary of the G20 finance ministers in Bangalore on the February 24th and 25th included a strong condemnation of Russia's war in Ukraine, as agreed by G20 members, except just two countries, Russia and China. Additionally, at the February G20, progress has been made on debt issues by unanimously sharing the sense of urgency to address debt vulnerabilities in low and middle income countries. And I have a very, very good working relationship with my Indian counterpart and will enhance collaboration between G7 and G20 further throughout this year. And so my feeling is it's not a sort of a rivalry, but a very strong collaboration. And we have, a sort of a distinguished roles for G7 and G20. And now I see more synergies between them. Thank you very much.
Can I just ask a brief follow-up on that? Because obviously things are getting quite critical for a number of low-income and also middle-income countries. I was very glad to hear your preview of an upcoming announcement from Japan, India, France, and Sri Lanka. That's very exciting for the people of Sri Lanka. Earlier today, we had the South African Reserve Bank Governor, Lesotho Ganyago, speak, and I asked him about the China-US divisions over debt negotiations in general, and specifically about Zambia. So I understand you're hopeful and you're working forward, but can you give us a bit more sense of what you're hoping to accomplish this week in terms of the debt?
Yeah, of course, it is still under negotiations, so concept, probably, we can reconfirm our resolve to swiftly implement the common framework, but it might be a bit difficult for the concrete results for the Zambia, Ghana, and Ethiopia. But for Sri Lanka, hopefully we will have a very significant progress, which will, in a sense, launch the creditors committees. So, it is a rather, very difficult and long way, but, we can't, make these most vulnerable countries wait more. So
yes.
It's really a sense of urgency. And the more day, the more difficult their situation. And every day people is dying, so we can't wait.
Thank you for your clarity on that. If I could raise, as you and I have talked about before, a broader issue of the debt. I mean, how do you see the progress that's been made on debt problems and improving debt transparency in the developing countries? You made a point about transparency in your slides. So beyond the common framework, what do you see happening in this area?
Yeah, there are many fronts we are doing. Of course, I don't think it's not wise to create a completely new one, which will take more time. So the better thing is to implement common framework as soon as possible, swift implementation. But to make it more, rapid one, probably there might be room for improvement. For instance, more incentive for the both creditors and debtors to move on, including a sort of an idea of standstill. And also the data transparency, it is very important, and the role of the international financial organization, particularly the World Bank and the IMF, is pretty much important. And what we are doing most is using the World Bank's sort of a depository, and so reconciliation of the data from the creditor side and data side, and after all, probably we can have the more fair and concrete picture. And also for the private sector, most recent trend is the hike of the share of not only China, but the private sector holding up quite big. So we needed to involve the private sector of the comparable terms, and therefore we are, trying to get more data through, including the collaboration with the IIF also.
Thank you. You mentioned, which I'm not sure most people realize, that Japan, in addition to being G7 presidency, is in the ASEAN +3 presidency, and your presentation or speech obviously emphasized the Gs, but Japan has a role as part of the Asian region, very diverse region. What kind of role do you think Japan should be doing in the Asian region, obviously given the presence of China and others? And how do you want to manage that vis-a-vis the multilateral system, the regional versus the multilateral?
Yeah, thank you very much. This is again very important question, and particularly this year we are co-chairing the ASEAN Plus 3, China, Korea, and Japan, and Japan has been leading Asian efforts to maintain regional financial stability and achieve economic growth, including through the ASEAN Plus 3 finance cooperation, especially after the Asia financial crisis. This year, as I said, we are, the co-chair of ASEAN Plus 3 with Indonesia, and the ministerial meetings are coming up next month, the first week of May in Korea. This year, we have kicked off a fledged discussion on strengthening the regional financing arrangement, RFA, including to create possibly new lending facility under the Chiang Initiative Multilateralization, CMIM, which can be readily available to member countries in the event of external shocks. As you know, even during the period of COVID-19, CMIM were not tapped. So we are now trying to create a new facility which is more agile and more rapid financing in the next crisis. And another thing, on Asian Bond Market Initiative, ABMI, we have developed this new medium-term roadmap which focuses on sustainable financing and digitalization. We have also picked up financial digitalization in Asia. While new technologies bring about opportunities, including fast and efficient payment, there are risks such as faster spillover effect and data security and data privacy. We are discussing forward-looking recommendation for RFAs, including surveillance and technical assistance by AMRO. AMRO is stationed in Singapore. Right. Furthermore, Japan is leading efforts on strengthening financial resilience against natural disasters. Unfortunately, Japan has been hit by natural disasters quite often, so it is our responsibility to help other countries tapping on our experiences. So we are planning to upgrade disaster risk financing as a regular agenda under the ASEAN Plus 3 finance track and explore new insurance products and other innovative financing products.
Can I follow up a bit, please, on the Chiang Mai initiative and the swap lines? A good, 20 years ago, a little or so, a little more, when the Chiang Mai initiative was proposed following the Asian financial crisis, Randall Henning, now at American University, did a study for the Peterson Institute on that. There was a lot of political rhetoric about the possibility that the Chiang Mai initiative might lead to an Asian monetary fund or distract or devalue IMF. There was concerns to some degree in the US Treasury. Given that it hasn't been tapped, do you expect to create a new set of opposition if you start making something out of it? Or do you think now the IMF and the US Treasury would view that swap line differently?
As far as I feel, there is no objection from Washington, D.C. I mean, yeah, you are quite right. When we created Chiang Mai for the first time, a few decades ago, there was some, nervous, concerns from around here. But now I can't see anything about that one. Probably, they understand the importance of this kind of the regional financial safety net, and also this exists, for a long time, and in a sense, they very much, in a sense, a part of the financial mechanism of Asian countries. So, so after all, they need to coexist, and also probably there will be a very good synergy on the division of labor. And as you know, to some extent, 20% or 30% are linked to the IMF program. But on the other hand, from the unique nature of the Asian countries' economic situation, many member countries would like to have more independent triggers. So now, gradually, the sort of independent share has been increased for these years. But I don't think the 100% by Asian, but probably there will continue to be some link with IMF program, and will continue the very good relationship between fund and us.
Thank you. You also mentioned in your, excuse me, your summary you gave of the various ways Japan and other neighbors in Asia are working that together. Some talk about the digital agenda. There are obviously many aspects to that. One issue is the question of sort of free trade and digital transmission. I'm not going to ask you to respond to her directly, but yesterday the Indian finance minister in her remarks here made a big call for reopening some of the WTO agreements to allow charging for transactions by governments for cross-border transmission of internet. At the same time, you mentioned Japan and some of your neighbors' commitment to privacy, and there are real commitments in the CPTPP on this. China obviously is not fully subscribing, let's say, to some of those aspects. So could you just say a bit more about how you see the digital agenda going forward in the region?
Yeah, not only for region, but this you are right. This is a quite big agenda, and the technology is very rapidly developing. So, what we are doing is not to be behind the curve, vis-a-vis, of course, the private sector's development, and also the sort of authoritarian regimes. So as for so probably what we are doing in two fronts. One is CBDC and another is crypto asset regulations. And as for CBDC, for instance, for Japan, we have been making necessary preparation because public demand for CBDC may surge with the rapid development of technological innovation, and Bank of Japan has been conducting experiments on CBDC since April 2021, and recently completed the proof of concept to confirm the technical feasibility of the basic function of CBDC. And pilot program to develop a system to test end-to-end process flow while exploring the measures and assessing potential challenges of connecting the system with the external one. And this kind of efforts are we frequently exchanges and also the coordinating with other countries, including, of course, the Asian countries and amongst the G7 and the FSB and so on. So, but when we develop it, we think sort of fundamental discipline is very important. As I said, the public policy disciplines, and including the data privacy or the transparency and so on. And for the crypto assets, there are a bit, diverging views amongst countries, but a consensus is definitely we need more regulations to, because, particularly after the FTX shock, and, many views, of course, there are a variety of crypto assets, but not a few are just speculation. So, and it is quite dangerous for the, monetary stability and also the AML or the FATF concerns. So now we are tasking the FSB and IMF to, deliver the more studies, and finally, probably we will increase the level of our regulations on that. But anyway, what I want to say is that this is quite rapidly moving areas, and the more coordination is needed, because this, spillover, one thing is the bad things spillover, and another thing is the benefit of the interoperability across borders. So anyway, we need a very strong coordination across borders on this issue.
Thank you. Another issue you raised for coordination was on corporate governance, and you mentioned you're the chair of the OECD, I guess, working group on that, or committee. That is something that we usually, I shouldn't say everyone, but at least I, and I think some of my colleagues, don't usually think of in this international cooperation context. Your predecessor's predecessor working on international corporate taxation, that we understood. We're very glad of Japan's leadership on that point. But so what are you seeking to achieve in terms of cross-border or international corporate governance reform? I mean, what's the problem you're trying to solve, and what's possible?
Yeah, thank you for asking this. My thought is, the reality has changed dramatically. The transformation of society and economy are quite big. So we need to adapt the corporate governance principle to this new reality. I mean, more precisely, the global economy and society have experienced structural changes, including through the COVID-19 pandemic and climate change and so on. In this difficult setting, corporations need to adapt their business strategies to changing environments and enhance their long-term corporate values. Also, the global capital market has seen a decline in the number of listed companies. Very dramatic decrease, reduction the number of listed companies in recent years. Initiatives by each jurisdiction should be supported to help improve corporate access to capital markets and provide investment opportunities with households. So this is really essential, not only for the companies, but also for the households. It's really core of capitalist or market economy. And against this backdrop, the review of G20 OECD principles of corporate governance, which is completely the international exercise, not only the OECD countries, but almost all the market economic countries, including all G20 and all FSB members. So obviously includes India and China and other emerging countries. And this single global standards in the area of corporate governance should be adapted to this new reality. And the launch of the review process was endorsed by G20 leaders at the Rome summit in October 2021. So, we have been working more than 2 years or so. So and I have only a half year, September, so
right.
4 months, so I'm a bit in a difficult situation. But anyway, one of the things I'm very much ambitious is the introduction of a new chapter of sustainability and resilience, which includes new principles for sustainable corporate governance frameworks and corporate disclosure. And as you know, the ESG, environmental sustainability, there are many debates in many fora, but there has never been any sort of legal document. So this might be the first case which international committee will be able to produce one consensus on this very difficult agenda. And anyway, I strive to pursue the endorsement at the New Delhi summit.
Thank you. We're coming up on time for you to get back to the international meetings, and I'm very grateful to you for including the Peterson Institute and our global audience in your schedule. One last sort of quick question on a very traditional issue. Japan is the IMF's second largest shareholder, I believe also the World Bank's. How does Japan see the prospect for giving emerging and developing economies more voice in the new quota review? I mean, is this something, obviously Europe and the US for their various reasons are resistant to this, but when you speak about bridging the G7 and the G20, this would seem to be a natural place.
Yeah, this is really sensitive agenda, so it might be a bit difficult for me to say anything in public because it is really, under negotiation on the 18th Street. So, but it would be fair to, to some extent represent the economic strength, but at the same time, it is very important to, maintain the integrity of the institution, which has to protect the, universal values. So, the voice should be accompanied by the, in a sense, the behavior or willingness to preserve international order and the international law. So it quite depends. But anyway, we are now, as you know, the general quota review is now under discussion, and some developing countries are talking about the MDB's capital increase. And this is a reality, and we are constructively engaged in this discussion. And hopefully we can have a good consensus, but at the moment there are many, many issues. And as for the MDBs, probably for many countries, the first priority is to implement the CAF, capital adequacy.
Right.
So without the capital increase, first we need to utilize the existing capital as much as possible to, save the most vulnerable countries.
Thank you so much. It's been our privilege today to host Masato Kanda, Japan's Vice Minister of Finance for International Affairs. I want to thank you not just on behalf of the Peterson Institute, but the international community for the kind of breadth and values-based leadership you and Japan were expressing today. Thank you very much.
Thank you very much indeed. Thank you.
Thank you.
Thank you.